Hey guys, welcome. My name is Mike Schroeder with Steinke with the All Funds Network, and today we're here at the BitGo Vault in New York, interviewing with Brett Kelly,
Yep.
institutional sales of BitGo. Hey, Brett,
Yeah, thanks for having me, guys.
thanks for joining us.
Yeah, welcome to the sellers of the BitGo office. We're excited to do this one.
Absolutely. Lights wide hand. You guys got a great setup. Excited to be here.
Yeah, thank you.
Let's kick it off with your background. So, maybe just give us a quick of your background, and let's get into BitGo a little bit.
Yeah, definitely. So I started my career in fintech at a company called Brokerage Financial after graduating from Penn State. Been with BitGo for about 3 years, and I'm on our institutional sales team across our custody, staking, and prime brokerage business. So yeah, it's 3 years in crypto feels like 10 years, but it's been a fun journey. Yeah, lots happened since when I first started. So business has grown quite a bit, and yeah.
That's great. Well, Brett, talk about your journey at BitGo. Like when you started, obviously a lot's changed the last 3 years, as you talked about, right? I mean, kind of bring us up to speed where things are at today.
Yeah. So when I first started, we had $60,000 Bitcoin, and then FTX happened probably a couple of weeks into my BitGo tenure. So that was an interesting time, kind of watching a 50 to 60% drawdown in the market, especially as a custodian. Your revenue is tied to the performance of the market, right? So that was an interesting time and a scrappy time. I started on our platform sales team, which is more of our sort of crypto native API facing businesses. So think crypto exchanges, retail trading platforms like Robinhoods of the world. And then probably about 2 years in, I transformed to our institutional sales team, where I cover mainly venture funds now, asset managers. I do some cap intro on the pension fund and endowment side, so helping allocators connect with funds as well. So yeah, it's I think what's changed a little bit since when I first started at BitGo is I think the sort of the fee structure around custody has become a lot more compressed. I think with the introduction of ETFs and allowing people to get out exposure to the Bitcoin asset class directly through their traditional financial vehicles or relationship managers or wealth managers has been interesting for people who might not necessarily want to just invest directly through a BitGo, or a retail exchange like Coinbase or a Kraken. So I think the fee compression has been interesting as well. It's a custody is a competitive sort of space, right? And at the end of the day, it's a commoditized business, but everyone does custody a little differently. So yeah, I think that's sort of how things have taken off a little bit.
Yeah. So you talked about a couple different business lines. Why don't you give us just like the high level? What is BitGo's kind of full offering?
Yeah, so custody is our core business. We started in 2013 as really just a wallet company. Our CEO pioneered multi-sig technology, so we use a 2 of 3 key quorum. We've grown quite a bit on the regulatory side since then. So we have 7 trust charters globally, 2 here in the US, in South Dakota and New York. So I'd say custody is where we started. We've grown that custody business to north of $100 billion in AUC today, which, in 10 years, I think is a pretty impressive feat. We've taken a large step into the staking business as well. So I'd say staking probably makes up $50 to $60 billion worth of our assets under custody today. So we are probably one of the largest staking platforms out there. Now that's comprised of a bunch of different validator partners that we offer through our platform today. So if you wanted to stake certain assets to a certain, name your favorite validator partner, you can do that through BitGo. We launched an OTC desk last year, have done roughly $5 billion in transaction volume through that desk. So if you have assets held in custody and you're staking that position in custody, you can also trade that position through our OTC desk as well, which is a nice value add for some of our clients who want to streamline some of their operations and become a little bit more capital efficient. And then we also have the Go network, which is our settlement network. So a lot of our trading is done and delivery, reverse payment, settlement over that Go network. So yeah, I mean, it's been a long journey coming from just custody, but we do, I guess the last piece I would say is our financing business. So we have a large borrow lend business. Mainly, we mainly are lending cash against BTC over collateralized. We have done some more bespoke lending agreements where if you want to put up some longer tail assets at higher collateral levels, we'll lend against that as well. But mainly just lending USD against BTC, ETH, Solana. So yeah, it's been a journey.
What do you see? Obviously covered venture. What do you see in the venture side? Obviously it's 2025. There's a lot of changes regulatory wise. Technology has come a long way. What are you guys seeing in the venture side, man?
Yeah, I think the venture dynamic in crypto is interesting. I think it's retail, I think, has their views on venture in crypto. They tend to lean towards not being favorable to venture, but I think for BitGo, right, that it's a good business for BitGo, right? Because what's interesting about some of the venture funds is a lot of them in the US are SEC registered vehicles, and you have an SEC regulatory requirement to hold assets with a qualified custodian. So whether that's BitGo or one of the other competing custodians in the US, it's sort of a nice tailwind for BitGo's business that a lot of these venture funds have to use a custodian for their holdings. I think one of the trends that's interesting is obviously SAFs are a big, talk of the town in crypto. So I guess for the audience, SAFs are simple agreement for future tokens. So when you make an investment in a early stage protocol, whether it's pre-seed, seed, or Series A, when that protocol goes live, there's usually a token generation event or component to making that investment. And a lot of times it happens to be venture capital funds that are making those investments. So they get some sort of token allocation in the future when that protocol goes live, and they hold those positions with a qualified custodian like BitGo. And we help manage the vesting schedule and the unlocks for them on those positions as as it grows over time. So SAFs are really interesting. I think what comes along with SAFs are locked token deals as well. So I think the locked token deal market is I think it's one of the most niche, best kept secrets in crypto. They happen very frequently. And it could be a little bit of a taboo conversation, right? Because when you make an investment in a foundation or a protocol and, you want to exit that position before it unlocks, right? You need to find a counterparty on the other side, but it sort of goes against the ethos of, investing in it in the first place, right? Like, why do you want to exit the position before it unlocks, right? So I think that that's a very active market that BitGo sees, just given we're a custodian and we have the buyer and the seller often frequently also have BitGo accounts, right? So we will help facilitate, just given that those assets are held on our platform, we help, if there is a transfer that happens or there's a secondary deal that takes place, we have a unique sort of front row seat to be able to help them transition those positions between each other if there is a transaction that takes place.
Right. And I guess just stepping back from a venture point of view too, in the traditional space, liquid tokens are not really part of the thought.
Right. Yeah, no.
Clear?
Yeah, no, they're not. But I think what's interesting, a lot of these venture funds, they also have some element of a liquid token fund or component of their business, right? So I guess traditional venture crypto is locked tokens, right? But a lot of these guys are making investments in liquid positions, and they hold liquid positions, excuse me, and they need to hold those with a custodian, right? So there are a number of VCs out there that aren't SEC registered vehicles, right, or have unique sort of regulatory status, and they might use self-custody, or they might hold assets on an exchange, or might not see the value in custody. But there's a large portion that has been a nice driver for BitGo as well. So
Yeah, with the VC stuff, talk to us when it comes to custody, are there different challenges you guys face? The first thing that comes to my mind is obviously there's so many protocols, there's so many different layer ones that they're building on top of. Kind of talk to us about that aspect of.
Yep. So there's one of BitGo's sales businesses is called our ecosystem team. So they're really focused on new protocols and helping them go to market upon TGE. So a lot of times we'll partner alongside those L1s or those new chains as their custody partners. So we will custody a large portion of their treasury. But I think one of the challenges that we do have with new token launches is there's so many, and they're all so unique from a technical perspective, right? Cosmos comes to mind. I think the Cosmos chain, there's not a lot of nuance between chains that are building on Cosmos from a BitGo product and engineering support perspective. So we tend to be able to get to market a lot quicker with Cosmos chains because of the way that our wallet stack's built and the way that Cosmos is built. But with some of these newer chains, like I think Chain might be a good example. It's a very nuanced technical sort of chain, and there's a lot of things that are different about Chain than maybe from Solana or another L1. So oftentimes it requires 4 to 6 months lead time for us to build support for these new L1s and make sure it's technically feasible, but also that there's no backdoors or loopholes, and make sure BitGo is protecting our client assets at the end of the day, because we are a fiduciary, right? So we do have a responsibility to keep our clients' best interests at heart and make sure their assets are secure. So while I think that's a challenge, ERC20s and SPL tokens built on top of Ethereum and Solana, have a unique ability to be able to get to market really quick with those. So it probably takes us anywhere from 3 to 5 days to launch support for a new ERC20 or an SPL because we support the token standard already. But with that being said, I think in the custody space, we are probably, if not the quickest, one of the quickest to market with support for new chains and being there on day one for our clients that need support for new L1s as they come online. Yeah.
That's very cool.
Yeah.
Obviously, one of your business lines is staking. I'd love to hear kind of who are your core audience for staking? What's the main ecosystem look like? What are you guys doing there?
Yeah. I think our core audience for staking, on the institutional side, is the hedge funds and the venture funds. When we support something for custody, oftentimes it's not good enough, right? You want staking as well if it's a stakeable asset. Being able to generate yield is huge for these guys, right? Especially if it's a fund that's structured that has LPs or they raise external capital, right? The LPs are like, we want yield, right? We don't want just our assets sitting in custody. You're only as good as what's the saying? They say, what have you done for me lately, right? It's like one of those things. So I think that's a big audience, is on the staking side, is not just having custody, but having staking from day one for the VCs and the hedge funds. I think on our platform side of the business, so I referenced this earlier, but more of our crypto native exchange and retail trading platforms, staking is a huge piece there as well, because they have hundreds of thousands of users like a Robinhood or a SoFi of the world, right? Who are using their platform and also might want to be able to generate yield. So on the crypto native side and the platform side, staking is a large driver there as well. I think Solana is probably one of the highest staked assets on our platform. Sui as well. We were one of the launch partners for them. So I think it's a unique blend of managing the institutions on the venture and the hedge fund side, but also the retail customers that maybe aren't direct clients of BitGo, but the platforms that they use are also clients of BitGo. So that's a big piece as well.
What kind of trends are you guys seeing within the venture capital space?
Yeah, I think the SAFs piece was big. What I think is interesting as well is with the regulatory, I think, environment starting to get a little bit more clarity here in the US. I wouldn't say this is a BitGo house view. Maybe this is more my house view. Is I think you'll start to see some of these more traditional venture capital firms start to make a bigger push into the space and build out digital assets sort of focused investment themes. I kind of mentioned it before. I think VC and crypto is like one of the best kept secrets, because I do think that some of the best VCs in the space do very large multiples. And I think providing, a regulatory environment that will allow some of these more traditional VC and investors to be able to get skin in the game. I think the more that active they get, they'll start to see the multiples that they can earn for their LPs in investing in, whether it's liquid token investing in crypto or it's via SAFT and doing locked token deals, in a seed, pre-seed, seed or Series A round. So yeah, I think from my view and our seat at BitGo, obviously I'm not in the nitty gritty, like doing deal flow and scoping out some of these new protocols, like even pre-seed. So I guess it's kind of hard for me to give you an accurate description of what that looks like, just given I'm not investing myself. But we do see, given a lot of these VCs are our clients, we do get inquiries, early into the process of like, hey, do you guys have any plans on supporting, this new protocol that's going to go live in Q3 or Q4 on mainnet? So we have a unique front row seat, I'd say, to kind of how things are unfolding. So those are the trends I think that I've seen, at least lately, is the SAFs piece, and then the traditional guys, I think, making more of a push.
Yeah.
It's very cool. Kind of going back to the custody side of things, obviously lives changed over years. You mentioned regulation, kind of opening up in the U.S.
Yeah.
Going back to the SEC registered RIAs that obviously are getting into the space.
Yep.
There's a lot of education a lot of times, right? There is kind of what you're seeing. We've come a long way, but we still have a long way to go. So curious the feedback you're getting from RIAs who are coming in the space, asking about where are keys, where are wallets, how does the custody work, their insurance, all these different things probably come up.
Yep. Yeah, it's a good question. So I think we've seen obviously a large uptick in banks and traditional RIAs wanting to at least evaluate the space now, whereas maybe 6 months or a year ago it was like, hey, we have no plans to even really evaluate. A lot of these guys are starting to re-engage now. I don't want to name names for obvious reasons, but we've had a lot of meetings with traditional finance players and traditional venture funds that and it's more from an educational approach, right? What are my options? Where do you sit in the space? How do you work with different service providers? And then I think taking a step further, getting a little bit more granularly, when you start to get into some of the keys and the insurance, right? So, we run a deep cold storage, right? Offline. I mean, our BitGo Trust chartered entity in South Dakota is our regulated qualified custody arm, right? So, all of our keys are held offline, generated offline, stored offline. Don't want to get too much into like, the secret sauce, the minutia. But they are curious about, I've had conversations with traditional venture capital funds who were like, it's even gotten as high level as like, what is a private key, right? And having to explain that it's sort of like this master password that underpins your wallet, right? And if you're doing self-custody and you lose that thing on a MetaMask or a Phantom, like there's no reset password flow, right? Like it's whatever's in there is gone. There's no recall, right? So, and I shared this example with you before, but I remember like a year and a half ago, there was a large public company who, wanted to do some crypto NFT related things with us. And we had to explain private keys like they were Horcruxes and Harry Potter, because they didn't really know, what a private key was and how you shard a private key. That's sort of how we related it to Horcruxes. But, to tie that all back together, I think finding a way to bridge the gap between the jargon, the language that we use as crypto native folks, to people who are really just evaluating the space has been a new challenge for me, and I think a lot of people at the firm, because you're so used to, I guess, maybe having conversations with people who are really in the weeds, right? And being in a sales perspective, how do you provide that value prop to someone who might not speak the same language? So that's been fun.
Obviously, being like one of the biggest custodians too, what is the kind of like what are some of the competitive advantages? Like you talked about like deep storage, things like that. Like what do you guys really see what do you see as BitGo's kind of primary?
Before we got to that, there was one piece on the last topic that I wanted to mention. So with the traditional finance sort of regulatory unwinding, SAB 121 was a big blocker, I think, prior to the new administration coming in, which was a staff accounting bulletin that basically said that in order to hold a crypto asset on your balance sheet, you had to recognize it as a liability, and that capital requirement was significantly higher than if it were an asset, right? So the unwinding of SAB 121 and the implementation of, I think it's SAB 122, we've seen that as a large paradigm shift, in at least allowing these guys to evaluate. So sorry, I know I went a little out of order there, but it just reminded me. So, being able, if you're a bank, right, who wants to start to evaluate, do I want a custody business, right? Do I build one? Do I buy one? Or do I license technology, right? So I think that has come alongside the revoking of sort of SAB 121 and the re-implementation of SAB 122. And even more broadly, just, hey, do I want to hold this on my balance sheet and not recognize it as a liability and have this massive capital requirement? So, I think that's been a theme as well.
Good. In terms of like custody, so like tell us like, kind of what differentiates you, like what makes somebody want to work with BitGo versus another provider?
Yeah, I think A couple of things. So I think we're one of the only true deep cold storage, vendors or providers out there. I mentioned it before, but the way that we sort of generate keys offline, hold them offline, store them offline. So that's one big piece as well. There's a lot of other custodians that might do the management of private keys and sort of signing quorums a little differently, but we truly think that multi-sig and deep cold storage is best of breed and best in class. And I think we've been around for 10 years and haven't lost a single dollar of client funds. And so knock on wood, hopefully that stays that way. But so I think that's one differentiator. I think a lot of people might say BitGo's, has clunky UI or, old technology, or they're slow. But we're very much a security company first before we're a fiduciary or really, a crypto custodian. Is securities first and foremost, the most important. It's paramount. When you hold $100 billion worth of other people's assets,
Right.
it's an ongoing exercise of how do we stay ahead of everything that's going on in the space. I mean, you guys have seen all the attackers and the hacks and stuff like that. So we take security very seriously. So I think that's one piece. I mentioned it before, but time to market with new coins and new chains. I happen to think that we're right up there with the best. And I think that's a product of, product and engineering, right? Like a large portion of our company is product and engineering. And there's a reason for that, is because we need to get to market with new chains and new tokens and new coins, because when venture funds invest in these things, my lens is obviously a little bit more focused on venture, but when you have a new protocol that's coming out and you have one or two custodian relationships, whoever supports that first is probably going to win that next allocation, right? And that's a revenue driver for us at the end of the day. So that I think is a differentiator. Time to market, speed, and look, I think a lot of ways we're sort of, on the custody side, a little bit of a white knight when things tend to go really badly in the space. Pick your favorite bankruptcy proceedings or things that have blown up. BitGo tends to be the first call of like, hey, we need help cleaning this thing up, right? So we've done a lot of those over the years. I'm not going to name the name specifically, but things that have gone really poorly, BitGo stepped in and helped facilitate helping investors, in bankruptcy proceedings and things like that. So I think those are the three key drivers, at least for me, that make us a really big differentiator.
On that note, with the custody side of things, like it sounds like, with like the deep storage stuff like that, it sounds like these are for more maybe asset managers that are not trading as frequently. Is that correct?
Correct. Yeah, that is correct. So I'd say, like, if you're a high frequency programmatic trading firm, right, BitGo's probably not going to be the best fit for you, right? Because we have true deep cold storage. Now, I think we also have self-custody hot wallets, right? So if you, on our platform, if you were like, I can't wait, for the SLAs of withdrawals that BitGo provides because of deep offline cold storage, you can also create hot wallets on any of the coins that we support and manage, multi-sig, MPC, and manage your own private keys and be able to sign transactions yourself and withdraw things. So that is nice for, people who are really strong in their ethos of self-custody, not your keys, not your crypto, or just need to transact really quickly. So like payments companies come to mind where, they're remitting and making thousands of payments per day because it's just the nature of their business model, right? And they need to transact really, really quickly and sign transactions themselves. So they're a great fit for our hot wallet solution. So yes, if you're a high frequency trading firm, that BitGo obviously isn't going to be the best fit for you. But I think that's what made the introduction of our OTC desk really interesting is, we provide you an avenue to trade. We also have, electronic riskless principal smart order router trading engine in our user interface. The universe of coins that you can trade on that UI directly in our platform is relatively small. So we're not running a massive exchange, but the introduction of the OTC desk provided a way for a more high touch, sort of bespoke order type of service where if you have assets held at BitGo, significant large notionals, right, you can execute with our OTC desk, which is a BitGo Hong Kong entity, Hong Kong Limited, and you can execute those trades directly with our OTC desk without having to move assets outside of the platform. So I will say that there are some, the asset managers that trade with us today were not the asset managers that were trading with us 2 years ago because of the introduction of the OTC desk. But yeah, it's definitely, like I said, for the high frequency guys, that BitGo is obviously not the best fit for them. But if you have a liquid position, in BitGo custody and you wanted to trade with our OTC desk, you can do that almost instantaneously and then settle those funds, 15, 20, 30 minutes later, right? Because we know that those assets are held in our custody platform. You're trading with our desk. So we have visibility into those positions as well. Yeah.
That's really cool. Kind of going back to the venture side of that, what are you seeing you customers come on board? Where they miss? Where are some common misconceptions? The things that happen
about BitGo or about like in the space in general?
to the space. Maybe it's a new fund that's an RJ.
Yeah.
And maybe they're new. Like maybe institutions.
Yeah.
Yeah, they're an RAA, but they're not. You mentioned the education process, right?
Yeah.
New to process.
Yeah.
What are the things that come up in concept maybe?
Yeah.
Or just they missed the mark?
Well, I think like just paying custodians in general, I think is people don't really understand why they need to do it. But I think what's important, right, is in traditional finance, if you look at like a BNY Mellon or a State Street, right, they're custodying trillions of dollars worth of assets, right? Their custody fees are significantly lower because of the scale that they're custodying assets at, right? So, and they found ways to monetize in different ways, right? They have massive prime brokerage businesses, they have massive trading businesses. So I think the biggest misunderstanding or misconception is like, why are my custody fees so high? And our CEO had a nice tidbit, I think, on Twitter or LinkedIn I saw the other day. It was like, security should be seen as an investment, right? And not an expense. And I think a lot of times people view custody as an expense. This thorn in my side, this invoice I have to pay every month to keep my assets secure. But when something happens, right, you look at the Bybit hack, how many of those people do you think wish that they paid the extra $12,000, $15,000 a year to make sure that their assets were secure, right? So it's a conundrum that I fight every day. Is I'm always trying to fight the good fight of why custody is important and why market structure is important. Separating, a retail exchange from a custody business, right? I think there's still a couple out there that do it, right? And they have great businesses. I'm not knocking their businesses, but we've seen that story unfold of like when you have an exchange that has thousands of retail customers, then they're not separating the custody from the exchange. What has happened, right? And I think that is important. It's just explaining market structure. And we do have an OTC desk, we do have a trading engine, but we're not running a full-blown exchange with hundreds of thousands of retail customers, right? So it's a little different. And our custody business is completely ring-fenced from all of our other entities in the BitGo Trust chartered entity in South Dakota. So yeah, pricing is definitely a misconception and is a struggle, but I think it ties back into the compression of just custody fees and staking fees in general. Everything's continuing to come down, and I think firms are really starting to look at the drawing board of how do we monetize in additional ways in the space, which I think will unfold in years to come.
Sure. Yeah. I'd say fee compression is across the board. Yeah. Just for you guys, but you find that is having fee compression by basically their service providers, what they're doing.
Yeah.
All that is happening. So you're not alone. That's kind of what I'm saying.
Yeah.
In that regard.
Yeah. No. Yeah. It's. I think it's a challenge in any business. I don't think it's unique to crypto. I think it's more magnified when you're in such a volatile market like we are, right? When you have these, we went from a 35% drawdown in Bitcoin, right? Like that's a pretty big drawdown, and it's a significant drawdown, but I think our industry has just done it so many times that we've just learned how to stomach it, maybe a little bit better than some other industries, but
just put wires on and keep building.
You just keep building. Yeah. It's been the ethos for a long time, even way before I started in crypto.
How about from an education standpoint, is just the concept of keys, like, is that, are you still having those conversations? Like,
we are. It's more not only where the private keys held and where are they generated, but how many private keys are you guys employing in your key quorum? I mentioned it before, but the even what is a private key? But I think it's more. I think custody in the U.S. is not expensive. It's competitive. Well, it is. Maybe it is a little bit expensive, but it's competitive, right? You have 2 or 3 major players in the qualified custody space. So I think we all we all do the management of private keys maybe just a little bit differently. So when you have, you're talking to a prospect or a new client who's also talked to 2 or the other 3 qualified custodians, right? Sort of trying to get them to understand, rewire how we do custody versus how maybe they were explained how another provider does custody, is an experience in and of itself. Yeah, I don't want to get too much into like how we do, the hot wallets, private keys are, you maintain yourself, right? But in cold storage, there's a whole sort of offline process that we go through, upon wallet creation and things like that. And even signing of transactions and withdrawals, there's a whole bunch of securities and processes in place, that, I think are important to get people to understand, outside of just regulatory status and saying you're the most secure wallet platform, because you can say whatever you want, right? But people want to know, okay, well, why are you, right? Like, why are you the most secure wallet platform? Sometimes we'll make them sign an NDA and then we'll like get into the nitty gritty and stuff like that. Yeah, get in the weeds of it. Yeah,
Sure, too. Depending on the manager talking to you, it could be different how the user management is set up.
Very different.
Maybe 2 people in the firm, and now it's a different.
That's a great point. That's actually a great point. Yeah. So we have like multiple different segregation of duties, right? So you can set multiple different admins on an account, multiple approval transaction flow. So if you have, there might be some people in finance who need access to some transaction reports. You can make them viewers. They can sign in, but they can't do anything that an admin can do from like an enterprise control or account creation, wallet creation perspective. So we have a lot of our clients will set up multiple admin approval flows where you might have an admin initiate a withdrawal, right, to a whitelisted address, but they have 3 other admins on the account, all with separate sign-ins that actually have to go in and approve each one of those transactions. Even after they get approved, it goes to our team to sign those transactions, which like kicks into the offline sort of vault, signing of transactions that we discussed. So yeah, that's an interesting angle as well.
Let's talk about borrowing and lending. We got into a little bit, but give us kind of like a high level of that. Like,
yep.
What are people borrowing? What are yields
Yeah.
going for?
Yeah. So I think, obviously you have on-chain borrowing and lending. I think there's some smart contract risk there for, investment managers that might not want to take on that risk. So, BitGo Prime LLC is our prime brokerage borrowing lending business. We are mainly seeing a lot of demand in borrowing USD. So our clients will borrow USD from us, put up Bitcoin as collateral. So I think we're probably in the 175% to 200% collateral on Bitcoin. I think the main use case for a lot of high net worth individuals or asset managers that need cash is they don't want to sell their positions and incur capital gains tax. So they need working capital to put on leverage trades. So the most flow, or what we've seen in the desk at least, is lending cash against Bitcoin. We have done some ETH and Solana. We've lended USD against ETH and Solana pretty frequently. I'd say we're higher in the collateral percentages and against ETH and Solana and some of the longer tail assets, just given how volatile it is. We if we have to liquidate those positions, we will. Yeah, so I think that's been the biggest use case. I know we had a client come in the other day and was like, I want to buy a house. He's like, I don't want to sell my Bitcoin, right? So that's a great use case for us to lend them cash. He can go finance his home. He puts up 175% Bitcoin collateral. We're probably in the 12 to 14% range on loans right now. We run a matchbook, so we are borrowing cash on one side from another high net worth or institutional investor, in the 7 to 9% range, and then lending that back out to rehypothecating and lending those back out to our clients that have borrowing needs. So we probably launched the borrow lend business 2 years ago. It's picked up a lot of steam, I think, in the last 6 to 8 months, just given market conditions have improved. People are up 200, 300% on their positions, and they don't want to, like I said, incur capital gains tax. They need cash on hand, and they want to be able to finance the things that they do to make them happy in life, right? So that's where we come in. So that's a little skinny on borrow lend. Like I said, we've done it with longer tail stuff. Starts to get some pretty high collateral requirements when you're talking about some of the longer tail stuff. So we won't say no to it. We'll always evaluate it, but yeah, it's definitely, mainly been in the majors, borrow lend.
Very cool. Kind of talked to Blumen about this, security, whatnot, but from a risk perspective, that comes up. Risk can mean a lot of things for different people, but things like from a, someone comes in, ODD person, maybe evaluating a fund, and they go like, hey, what's your process look like from a risk perspective? And we can go wherever you like with that. But
yeah, like in terms of our internal sort of risk management.
Yes.
Yeah, well, I think the biggest thing is, all of our client assets are completely segregated from each other, right? So there's no commingling of client funds in our segregated sort of regulated custodian trust chartered entity. So I think that's the biggest piece. When a lot of these funds, when you start talking about, commingling of other client assets with their funds and what we call like an omnibus wallet, that starts to become a difficult conversation and a big no-go. We are SOC 1 Type 2 compliant, SOC 2 Type 2 compliant. We have a $250 million insurance policy per Lloyd's of London syndicate, which is a pretty well-known insurance provider. Yeah, so I think from a regulatory perspective, we're regulated by South Dakota Division of Banking in South Dakota and NYDFS in New York. So, we get put through some pretty stringent risk management evaluations, and we have annual pen tests that we do. SOC 1 Type 2 every year, SOC 2 Type 2 every year. So just making sure that under the hood that everything is presentable to our clients and that we're providing them, the appropriate risk management processes and controls that they want to see in order to become a BitGo client, I think has been top of mind recently.
Yeah, that makes sense. I guess maybe on the flip side of that, I don't know if you guys look at, the client risk perspective, it's key man risk.
Yeah, it is.
Things like that probably is the most common.
It is. I mean, we obviously have, as part of onboarding the BitGo, we have a significant, KYB, KYC process where, we evaluate the funds, the beneficial owners and things like that. Because at the end of the day, if they're using our platform, we're theoretically a stakeholder, right? In the fund as well, not financially, but, if they're using our pipes to run their business, then we have a vested interest in who they are and the type of businesses they are. And, is there adverse media out there around them? So the KYB process is stringent, but for the right reasons, I think, because, crypto is a little bit of the Wild West, and I think a lot of the vendors do a great job as well, like Elliptic, Chainalysis, TRM Labs, in helping mitigate some of that. And, we definitely employ some of those services from various different vendors ourselves to make sure that, funds are coming from, not OFAC sanctioned addresses or blacklisted addresses across the globe. So, risk management is pretty tight.
I don't even imagine just even outside of like someone passes away in the fund, right?
Yeah.
And they have key access.
Yeah.
How is that app? What do you guys, things that I'm sure that comes up.
Yeah. We have, so transfer of death ownership of assets, I think has been really, especially with Bitcoin trading at where it is now. It's been a question that's come up very frequently. So we do have a process in place for that, and adding, different beneficial owners and putting documents in place, and God forbid something happens to someone who's a sole admin or a single admin on an account, they shouldn't lose access to their Bitcoin, right? They should have a path to provide someone in their immediate family or someone who they trust to be able to claw back their assets, because it's an unfortunate event. And yeah, I mean, it's happened before. And I'm sure it's happened previously where firms don't have those processes in place, where, someone who's a Bitcoin whale has Bitcoin out there somewhere in the ether because, some wallet somewhere, because, and hopefully it wasn't, a self-custody wallet, or it was at a provider where, the person who you're transferring ownership to knows how to re-import a private key and do all these technical things that came up earlier in the call. So, yeah.
Kind of let you take this how you like, but how do you see the space evolving, whether it's custody, digital assets as a whole?
Yep.
What do you see changing, improving?
Yeah.
Next couple of years?
I think the space as a whole is going to continue to grow. I think that's been the common bullish kind of viewpoint from a lot of investors in the space. I think the regulatory tailwind will continue to push us forward. I think this is the first pro crypto administration that we've seen in probably in all of our, since anybody who's getting involved in this space, right? So I think that is going to continue to grow the space, not only hopefully from a price perspective, not financial advice. I'm not in the business of predicting price, but I think that, the asset class will continue to grow. People will still continue to build great things. I think personally, we've already started to see some of it, but a lot of offshore people building in crypto, I think, are going to start to come back to the United States and start to foster growth here and build really exciting things in the US. And, the president's mentioned he wants to be the Bitcoin superpower of the world. And I think that's a great thing. So that's an interesting angle. I think market structure will continue to grow as well. I think you're going to see more and more mature businesses continue to, grow out of the space. I think we've probably been labeled as a little bit of an immature industry previously. I think we're really going to see access. I think there might be a large slew of companies that could go public this year that are in crypto that will have access to debt capital markets and will help them scale their businesses and get more mature and might attract new talent. People that see, okay, crypto now has a ton of public companies. I think that could be an interesting angle for, I think we've seen a lot of traditional finance senior people from Wall Street start to make the push into crypto, and they've been doing so the past couple of years. But I think as we get more established and more regulatory guardrails in place, I think it's only going to get more exciting for people that aren't already working in the space. So that could be a lot of fun. I think custody businesses are going to continue to grow. They're relevant for market structure. If the space is going to grow in the way that we think it to, these assets are going to sit somewhere, right? And whether it's at a custodian in the U.S. like BitGo or it's a custodian internationally, the businesses are going to continue to grow. So yeah, that's my house view.
Well, to your point, crypto is a very nascent, smaller asset class given the overall market, right? So there's a lot of opportunity for
yeah, for sure. I think it's going to be an interesting, not only 2024, but hopefully into, the next 10, 15, 20 years. I still think we'll get some nice drawdowns in between, like we always do, just given the volatility. But yeah, I think there's a lot of really smart people in the right spots, and will just be a really nice catalyst for us to continue to grow this sucker.
Yeah.
Love it. That's great.
Yeah.
Awesome. Well, Brett, this has been a lot of fun, man.
Thanks.
Thank you for having us in the vault here.
Yeah, thank you for having me.
Kind of fitting, right? In the vault.
Yeah, custody, vault, yeah. That's
Well, where could people go to connect with you and learn more about?
Yeah, I'm assuming we'll drop it like the handles in the bio as well. But yeah, on Twitter at Cretbelly. So if you just switch Brett and B and K, Brett Kelly, Cretbelly. On Twitter, Telegram, LinkedIn. I'm active on all three. But yeah, if you want to reach out, feel free to give me a shout. Happy to chat. And thanks for having me on. This was a blast. Appreciate it.
This is Darren Brett. Make sure you put all that in the show.